traders, and welcome to today's currency recap. This is Imri joining you on this wonderful Thursday once again. So I'm just going to apologize in advance for my voice. I'm still a little bit under the weather, but at least I have a voice. It was completely gone just a couple of days ago. So on the up and up. And speaking of on the up and up, what a day for risk on sentiment. I mean, pretty much everything across the board that is a risk asset was doing quite well today. Even cryptocurrencies managed to stage a more impressive comeback than I anticipated, given the events of recent times. The big question is, does this rally have real legs underneath it, or are we in for a fairly crushing disappointment? Well, I think the answer to both those questions is yes, and I'm going to explain a little bit further. So I do think this rally has more legs to it. I think in the S&P 500, for example, you can see that on the relative strength indicator, we have a lot of space to go before we get overbought on the daily charts. I have a feeling we're going to test that prior swing point at 41.19, 41.20. You can see that on the chart as well. What happens there is going to be really interesting. But I think right now, based off of today's close, everyone's feeling good that Santa Claus is indeed coming to town. I'm not getting ahead of ourselves or ahead of myself too quickly here. November seasonally is an excellent month for stocks, yes. But I mean, if people are saying that today's inflation report was a catalyst or the reason behind the rally, and I just mean, if it is, that's a pretty scary thing to consider, because this is one data point. Also, how you explain the last CPI report, which was disappointing, and the market did the same thing, right? So it's an interesting question of how much stock we put into the actual numbers that come out of these news events. I believe it's interpretation and sentiment which really carries the day, not necessarily the number itself. In any case, I do think this rally does have legs underneath it, at least as we head into early next week. But once we push that 41.20 level, I'm going to see that personally as an opportunity to raise some cash. Moving on to the total world stock index, it's a fairly similar story here. We got this nice gap up today, and I see resistance at 90.70. Crypto markets, interesting. Okay, so I was calling for a rally into that 24,500 level on our proprietary index here. We never got that. Instead, we just came crashing down, broke out of support, and we're now back in that support area right now. In my opinion, the risk in cryptos is still firmly skewed to the downside. I mean, of course, there would be people wanting to buy Bitcoin around 17,000. Of course, right? I mean, nothing's really resolved regarding the FTX debacle. Binance has backed out of any potential deal making that was maybe on the table, maybe not on the table. So I think there are still myriad issues and headwinds that are going to batter the crypto market. And not to mention, if we get any sign from Fed leaders or from, if the midterm elections shake out a certain way, I mean, there are lots of external pressures here that would weigh on the crypto market on top of the issues that are specific to cryptos as well. So, I mean, we got a fierce rally today. If you bought that dip, congratulations. I'm not convinced that this rally has too much underneath it for it to keep going. I mean, maybe we'll test the moving averages. So maybe we get another day or two out of this, but it's not my trade. I'm not buying cryptos right now. I like the setup much better a couple weeks ago when we were trading firmly well within that support, well within the above this broken support area, right? So it'll take a little bit more before I'm convinced that we have a tradable bottom in place. Market outlook +2. We're trading above both moving averages, but the slope we don't have across yet. If we get another gap higher open tomorrow, it's very possible we do get that moving average crossover if we have a strong day tomorrow as well. Weekly calendar, there isn't too much going on tomorrow. we're going to have some consumer sentiment news out of the US at 10 a.m. Eastern, and then at 2 a.m. we're going to get some GDP readings out of the UK. Moving on now to currency analysis. All right, so in terms of daily performance, the crypto markets, I mean, they crushed it today. If this was any other day, this would be a very impressive day. But in the context of the crushing few sessions that we've had, I mean, is this a bear market rally? I'm inclined to think so, albeit it's a very fierce bear market rally. So impressive, yes, but we have to place today's performance in context. Over on the fiat side, oh boy, I mean, if you caught dollar yen, you did very well today. Down over 3%. What can I say? It was one heck of a move in the currency pair today. Otherwise, if let's say you weren't long yen, but you were long pretty much any of the other majors against the dollar, you also would have done very well. The big question to me, as you'll see a bit later on, is this a top in the dollar? I mean, the dollar index has been on fire. It was up over 20% at various points throughout the year. Having a couple percentage points in terms of a pullback, is that really such a big deal? So that's one view. The other view is this is the top in the dollar. This is a very important top in the dollar. Could be a multi-year top. We're going to take a look at the dollar basket and see if we can't glean some clues from it. And on the velocity side of things, I mean, we have definitely some extremes on the short term. Good velocity in the Aussie, good velocity in the yen, and very negative velocity in the dollar, the Canadian dollar, and also somewhat surprisingly in the euro. So we're going to take a look at that right now, actually. So we're going to hop over to TradingView and let's see what we've got going on. Okay, so start off with the Aussie, where we do have some positive velocity, yes, but we're still trading within what I still prefer to call a bear flag here. I mean, on a 4-hour price chart, you can clearly see we're back in resistance. Every time we've been back in this resistance area, going back to, well, I guess not going back that far, but going back to October 26th, every time we've traded in here. So we've traded in here once, twice, 3, 4. This is the 5th time. So are we going to sell off again? One thing I will notice is that we do have rising bottoms. We had a bottom here, we have a rising bottom here, then we have a rising low here. So that could be a sign that there is some upward pressure in the Aussie. It's a tough trade though, in my opinion. I mean, this is a strong resistance level. It was a strong support level on the way down. I expect it to still serve as strong resistance on the way up. So it's possible we get a slight push through the upper boundary line of this trend channel, but in my opinion, the Aussie is a tough trade. All right, the Canadian dollar. Ooh, take a look at this. This is a very interesting head and shoulders setup. I'd like to see this right shoulder get fleshed out a little bit more, but the pattern's pretty clear to me. And if we look at our momentum indicator, the relative strength index, there are some significant bearish divergences that have been forming in the indicator going back several weeks. So if the US dollar is going to be weak, I would expect some of that weakness to rub off on the Canadian dollar too. So in the US dollar, I remember saying, hey, I'm expecting some dollar strength. Well, I was definitely wrong on that one. But I did hedge my bets a little bit. I said it's possible we get a right shoulder here, and if we do, there's going to be a strong reversal. So I wasn't completely wrong. Remember, folks, if you're ever discussing markets, to give yourself some wiggle room there. I'm saying that half tongue-in-cheek. It's important to consider possibilities. It drives me nuts when people just say, hey, it can go up or it can go down or sideways. Yes, obviously, but give us some scenarios. Give us some levels to look out for that's going to eliminate one possibility or the other. So in this case, the bullish possibility got eliminated because we broke the neckline of this head and shoulders pattern. How do you measure the target for a head and shoulders pattern? Well, you simply take a 90-degree line from the very top of the pattern to the neckline, and then you take that to the breakout point, and you can see that that gives us a neckline measurement in the custom dollar basket of 1.22. That lines up roughly with the September 13th low. So we still have some further downside here before this head and shoulders target is met. So I still foresee dollar weakness, at least in the short term. But here's the thing. I mean, let's put this sell-off into some context, right? Because context is really important. I mean, in this basket, we had pretty much in almost a straight line a 26% rally. And so far, we've given back less than 38.2% of that, right? So, you know, this sell-off in context doesn't alarm me. It looks healthy. What I would like to see is a gradual deceleration in the decline to keep the longer-term bullish scenario intact. So I'd like to see a reasonable bottom here, a tradable bottom, followed by another reasonable decline. The key things I'm looking out for on the second leg of decline that I'm going to be expecting is for the slope of that decline to peter out. I want it to be a gradual decline. Notice how here it's almost parabolic. The second leg of that decline I expect to be shallower. If we start getting more parabolic declines, then I'm going to switch to an alternative scenario, which suggests that the dollar has put in a very long-term top. So those are the major things I'm keeping an eye on, guys. Oh, yen. Sorry, I forgot the yen. I've been talking about this descending wedge for a long time, talking about how it's a reversal pattern. We haven't broken out of the trend line of this falling wedge yet, but when we do, and if we get a daily closure above that upper trend line, oh, watch out. You know, I think the yen is going to be a monster trade once it finally puts in an established bottom. All right, in terms of currency analysis, that's it for me, folks. Time to wrap up. So in conclusion, equity strength likely to continue at least for the next few sessions. And the major FX question, in my opinion, is this a top or the top for the dollar? Either way, I still expect some dollar weakness in the short term, but I do expect that weakness to ultimately conclude eventually, right? Is that going to be next week? We'll have to wait and see. I'd be surprised, but we might get a tradable bottom as we head into early next week. In other words, a relief rally in the dollar. And as always, make sure that to keep your position sizing in check and make sure that you're always following your trading plan. One quick note, guys, I'm just going to hop over to TradingView before I wrap up. All right. When you see something like this is the proverbial falling knife. Do not try to catch a falling knife. You will get cut each and every time. What you can do is wait. If you miss this trade, you missed the trade. I'm sorry, there's no shortcuts in life. There's no shortcuts in trading. You missed the trade. You got to wait. You got to wait for a bounce. You got to wait for a bounce. Don't try to pick the top. Don't try to pick the bottom. Aim for the meat of the move. All right. So if you're buying right now, you're bottom picking. And if you're selling right now, you're trying to catch that falling knife. In my opinion, it's far more prudent to see whether we get a reversal or bear rally. You know, if it's a bull market power reversal, then we have parameters to trade that. If it's a bear rally, we have parameters to trade that. Either way, don't chase the move. The move's already done. It's you're selling into a hole right now. You know, so patience pays. Sometimes the hardest thing in trading is to do nothing at all. But here's the thing, right? Like in sports, what's that saying? You miss 100% of the shots you don't take. In trading, that saying just does not apply to trading, because the number one rule in trading is protect your downside. It's not to chase every opportunity you see. There's always going to be a good trade. There's always going to be another good trade, but you need to have actual capital, you know, actual money in the bank, in the trading account, to be able to take advantage of that next good trade. All right, so that's it for me, everyone. Stay safe out there tomorrow, and I'll talk to you soon.